Gold is having a moment, again. As markets wobble and global tensions simmer, investors have turned to the age-old safe haven. Since the beginning of the year, the precious metal has soared by nearly 25%, reaching an all-time high of $3,260 per ounce. That's not just a blip, that's a rush. The most dramatic surge came recently, climbing 9% in just 1 month after former President Donald Trump announced new tariffs. Investors, wary of trade tensions and geopolitical instability, poured money into gold. But now that the US and China have struck a fresh trade deal and walked back some tariffs, the rally could be losing steam. This has sparked a fierce debate among analysts. Has gold already peaked, or is it gearing up for another run? Some experts are sounding the alarm. After the tariff deal, gold dropped 3% in a single day. One analyst bluntly said, "This could be the top." As fears about trade wars ease, some believe nervous investors may begin pulling out. China, which had been aggressively buying gold as a hedge since the 2016 election, may shift focus to US dollar-denominated bonds, which offer yield, unlike gold. Safe haven buying only lasts while there's fear, one strategist noted, suggesting the recent surge was more panic than fundamentals. But don't rule out another climb just yet. Others believe gold's rally is far from over. They argue that if inflation keeps rising and global instability lingers, prices could climb to $4,000 per ounce. Central banks are still buying gold in significant quantities, not to speculate, but to reduce risk in their reserves. That's a big vote of confidence from institutional players. Meanwhile, retail investors are also doubling down. With portfolios now holding a greater share of gold than ever before, some may take profits. But others caution that trade deals don't signal a return to normal. As one analyst warned, assuming stability from a few headlines is naive. Interest rate cuts are another factor. With central banks expected to ease further, gold becomes more attractive as a non-yielding asset, especially when global bonds are barely offering returns. Still, the path to 4,000 won't be smooth. Analysts agree the gold market is likely to face short-term volatility, profit-taking, and sharp corrections. For those holding gold, the message is clear: hang on tight. The ride isn't over yet.